Hi guys, Chris here with Super Savvy Travelers. Hey, we're so excited once again because we have Nick Metta from Studio Legale Metta. And today we're going to talk about the dreaded issue of taxes. Now don't click off right now because you need to know this information. And the important thing we're going to talk about is what to ask when you have no idea what to ask. And that's where Nick is going to fill us in. So stay tuned. So Nick, thank you so much for joining us. It's always a pleasure to see you.
Thank you, Chris. It's a pleasure to be with you. Thank you so much for having me.
Oh, you're welcome. You're welcome. Okay, well, let's just dive right into the middle of this tax thing. And one of the questions that you and I discussed was, when should I think about Italian taxes? I mean, I think that's a really good sort of broad question, and then you can sort of zero in on all the points that you want to go over with us.
Sure, absolutely. Yeah, definitely. It is very important planning, especially with taxes. So obviously it depends on where you are with your plans. If you are about to buy a property, if you are about to move to Italy, if you are about to make an investment of some other nature in Italy. And sometimes even if you're going to do a luxurious purchase in Italy. Let's say you want to go shopping in Rome or Milan, and you want to go crazy on your shopping after after all this lockdown time.
Yeah.
So definitely every major step where you interact with Italian life, I think would be important to stop for a second and consider your options, risks, opportunities.
Ah, I see. Okay. Well, let's look a little bit about a lot of the questions I get, and I really don't know how to answer them, are, how does the income tax thing work? Like, I know there's universal taxation in Italy on everything you earn, and then also in America, I believe. And then how does that, there are offsets. Can you kind of simplify that a little bit for us?
Yes, absolutely. So first of all, disclaimer, I'm licensed to practice Italian law and I'm an Italian attorney. I have lived many, many years in the US, filed US taxes. So I have a very strong practical knowledge of the US tax system. However, I'm not a US tax consultant. So I'm going to look at this matter from the Italian point of view.
Okay.
And so I get your question is mainly for people who are planning to move to Italy.
Right.
And so one of the very important basic more than questions, facts to take into consideration is that the US tax system is very different from the Italian tax system.
Mm-hmm.
For example, in Italy, there is no consequence in terms of income taxation based on citizenship. So it doesn't matter if you are an Italian citizen or not, that will not create any tax obligation. Many people think, well, in the US, it is based on citizenship also,
Mm-hmm.
not only on residency. In Italy, it's not. In Italy, it's just based on the location of your residency and the location of your income. So
Okay.
if you have so if you have residency in Italy, and we'll talk about that in a second, or if you have income that is generated in Italy, you might have some tax obligations.
Okay.
And I use might have because there are a number of situations where even if you are a resident, even if you generate income in Italy, that there might be some loopholes or exceptions or bilateral treaties that create an opportunity to avoid taxation in Italy or to neutralize the Italian taxation somehow.
Oh, fantastic.
Yeah. And so that is a fundamental difference. There's no citizenship connection to taxation. The other fundamental difference is that in Italy, tax returns are personal, meaning you do not file a tax return as a couple when you are married. And obviously, this might interest only some of the viewers, only the married ones, but it is very important, and it offers a lot of opportunities in tax planning to decide whether to, for example, invest in your holiday homes into one spouse's name or the other,
Mm.
leaving the one without the one who is not on title completely separated from the Italian business. And so all the brackets and the taxation applies per individual, per person, even within a married couple. So that might lead you to, when you buy a property, might lead you to sign a very easy nuptial agreement where you, as an American citizen, agree with your spouse that you wish to adopt the separation of matrimonial property in Italy before you sign the purchase contract. That way, the purchase contract will be only will have effects only against one person, one spouse, the one who signs the documents at closing, not also to the couple. So, and that might make a huge difference.
Okay.
Now, just to circle back to citizenship, I said it doesn't have tax consequences in terms of income taxes. However, as I don't know if you know this, but if you are an Italian citizen living in the US, or a dual citizen, if you are Italian American, if you buy a property in Italy, you can use your citizenship to access a tremendous tax reduction at closing. So your transfer taxes would drop down more than 7%, would go from 9% to 2%, and the taxable basis is also lower when you buy as an Italian citizen living overseas. And not many people know about this.
Why? I didn't know
So,
that.
yeah. So if only one of the two spouses is an Italian American, let's say, the other one is only an American citizen, they just signed it super short. It's a half a page little contract. You can sign in front of any notary, even your bank in the US. That nuptial agreement would say, we agree that the properties purchased in Italy will fall under the separation of matrimonial property law in Italy, and that will do the trick.
Wow. Wow. There's all these little things you have to know. And I think that's why it's so confusing to me. It's like, okay, I read this and it sounds horrible, but I know there's got to be a workaround. So, yeah, I have a million questions. I don't want to shoot them all at you because then we can get into the nitty and the gritty of it. But it sounds pretty, not simple, but certainly workable. Because
Yeah.
a lot of our guys are high earning individuals, and they have a lot of properties and things like that. They're also concerned about the wealth tax. Now, I know there's a wealth tax. I don't know the ways around it. I also know in Calabria and some of the southern regions that you can have a holiday from the wealth tax. Maybe we
Yeah.
can touch on the wealth tax. That's a big sore
Yeah.
issue for people.
So I guess you're referring to the wealth tax that applies to foreign assets. So when you
Yes.
move to Italy, okay. So when you move to Italy and you become a resident, meaning you are either physically present in Italy or you are registered as a resident with the local township for more than 182 days within a tax year,
Yeah.
which is January 1st, December 31st, then you are a tax resident. And as a tax resident, you have a number of tax duties and obligations. One of them is you have a duty to disclose your foreign assets. And along with that disclosure duty, you might also have a payment duty, tax payment duty, wealth tax payment duty. You have a wealth tax payment duty on real estate that you own in the rest of the world, or in some financial investment products that you might own. So regarding the real estate, if you have properties in the U.S., we all know in the U.S. we pay property taxes regularly. Right. Yeah. So because of the nature of the taxes that we pay in the U.S. on our homes in the U.S., that has been classified very similar in nature with respect to the wealth tax that they came up with in Italy for foreign properties. So when an American lives in Italy and owns properties in the US and pay taxes in the US, they can use those taxes to offset the debt of the wealth tax in Italy. That's cool, right?
Yeah.
Yeah. So, I'm a real estate investor. Invest in the U.S., invest in Italy. I never paid wealth tax on my U.S. properties in Italy. Yeah, because taxes in the U.S. are higher than the wealth tax in Italy.
They're crazy.
Plus, there's another trick.
Yeah.
There's another trick. You can choose. Not many people know this, and it seems almost too good to be true. But there is a super tiny little provision that says that you can choose, instead of applying the wealth tax on the market value, you can use the acquisition cost. So obviously, if you use the acquisition cost, your property taxes in the US will keep going up every year, which unfortunately, sadly, so whereas the wealth tax in Italy will be anchored to the acquisition cost. So unless they decide to go crazy and increase the wealth tax in Italy, chances are Americans will never pay Italian wealth tax on their U.S. properties.
Oh my goodness, that is huge, because you wouldn't believe the emails I get, people in tears. Oh, I didn't know this, my Italian dream going down the drain. So this is really good news. Now, let's talk about some other taxes. I know, like, the taxation on worldwide income. Like, for example, we have our business, we're going to go over and we're going to do it over there. Are there offsets for income tax here in the US versus Italy?
Sure, absolutely. So when you move to Italy and you have business, rentals, other income that you are generating overseas, it is extremely important to look at the treaty against double taxation between Italy and the US, because whatever income you are generating in the US is going to want to know about it, and they might decide they want to tax it.
Yes.
However, Italy will want to tax you as well, because after you become an Italian resident, Italy is going to provide services, health services, a number of services, and they get which get funded through taxes, also with respect to income, foreign income. So the two countries, as most of the countries in the world, have agreed through this treaty against double taxation, for every single type of income and many situations, which country shall tax what type of income in what situation. And it is important to know that the treaty establishes two very important principles. One principle is exclusivity, and the other principle is precedence. So sometimes the treaty will say, for this type of income, only the country of residency has entitlement to tax you on that income.
Okay.
And then for another income, they will say, well, the country where you are where the income is generated shall tax it first, and then the country of residency will tax you as well if the taxes in the country of residency are higher.
Okay.
You know what I mean? So so location first, and then residency if higher, basically.
Okay. Yeah, location of where the money was made.
Or where the money is generated. So let's say an example, if you have a rental in the US and you live in Italy, you're an Italian resident.
Yeah.
So you have to report that income in Italy, and you can disclose that. So the treaty will say the property is located in the US, the income shall be taxed in the US first. So the US will take its cut, and then Italy will see, what was your income in the US? 10. Okay, what was the taxes that you pay? What are the taxes that you pay in the US? 2. Here would have been 3 under Italian rules, so you owe 1 to us.
Okay, that makes sense.
However, there is a phenomenal catch here too, which many people don't know about. The U.S. has extremely generous deductions when it comes to real estate income and income taxation. So Italy, because of the rules, the tax code of Italy, instead of adopting the Italian principle of taxation, which has almost zero deductions on rental income for individuals, they will take the American taxable basis as the taxable basis applicable in Italy. And chances are, once again, that because of the deductions, depreciation, maintenance, and whatever else, you might not have any taxable income in the US. So you might not have any taxable income in Italy either.
Wow, that is fantastic news. But it brings up another question. The people that want to rent out their apartments while they're not, while they're not in Italy, they're going to have a tax liability as well. Is there a certain point where you start to have to pay taxes, or it's just every penny you make?
So you have a couple of options when you rent a property in Italy. If you have residency or not, you have to pay taxes on rental income. That is because the property is in Italy. So regardless if you are a resident, if you are an American with a holiday home who lives in the US, you gotta file your tax return in Italy and disclose the income that you are generating. Now, regardless whether you are a resident or not, if you're American or Italian, you have two options. One is to go with regular brackets, which are pretty high, because up to 15,000 euros is 25%. They say 23, but if you factor also 1%, if you factor also city tax and regional tax, it gets to basically 25.5%, up to 15%. 15,000 euros. And then above that, it goes up to 27%, and then 38%, and so forth. So it goes up very fast. Brackets are much lower in Italy. And I mean, the threshold are lower, but the rates are higher.
Right. Exactly.
So, yeah. So as an alternative to the 25% tax, you can opt for a flat taxation. They call it also Airbnb tax. So you pay 21% on your income, no deductions allowed, zero deductions. Whereas with the 25%, you are only allowed a 5% deduction on your income.
Okay.
That's it. Regardless how much you spend, regardless the taxes you pay on that property, the maintenance, the repairs, doesn't matter. They give you 5% deduction, and that's it. You pay 25% on the rest of it.
Okay.
Otherwise, the 21% makes way more sense.
Yeah.
Just based on that. However, if you live in Italy, or if you plan to do any renovation work, it might make more sense to go under the regular tax system, the 25%, because the 21%, the flat 21%, does not allow any deductions. Right. But if you live in Italy, you will have personal medical deductions that will knock off a little bit of your income. Or if you redo the bathroom, you can access the tax incentive and get 50% back, 65% back. If you're lucky, 110% back.
Wow. That's amazing. There's so much to know about the taxes and, the incentives and things like that. It's almost a whole book itself. And I'm sure you and I will go into that a little bit more, but that's pretty great. Okay, good. So that's good to know for people who want to actually rent out their apartments. You have to pay taxes. You got to be ready to do that. You don't want to fall flat on that.
Yeah.
Important.
So one piece of advice I will give clients, to people who want to rent, most likely they will have to do some repairs, unless they are very lucky. They find property is turnkey and they just take over business from somebody else. But otherwise, in my experience, there is always something to do.
Right.
So my recommendation would be, it doesn't cost anything. Just make sure to make the payments in a way that they will qualify for the tax credits. Because even if you're not a resident, even if you're not generating any income, the tax credit can be used for in 10 years, for 10 years. So, and actually you can only use 10% of the tax credit every year. So even if you think, I will start renting it in 3 years, well, I have to make these payments to redo the floors or whatever, let's make them in a way that will generate tax credit. And if I use it, I use it. If I don't use it, I will lose it. But whatever it is, use it or lose it. But it might come the point in time when it comes handy.
Yeah. Yeah. No, that's actually really good. And now you've got me thinking about our B&B in Santa Domenica that we're renovating. So we'll be consulting with you on that as well.
Definitely.
Yeah.
Chris, I was talking with a guy who called a couple of days ago, and he spent a fortune renovating the first floor. He has a 2-floor little nice building in a small village.
Mhm.
And I said, so how much tax credit did you generate? He didn't know anything about it. He had not been advised about it.
Oh,
And now he's going to start a rental business, and so you don't have any credit to offset that.
oh,
And I'm so surprised that the contractors didn't let him know.
yeah.
And because it doesn't cost anything to apply.
Mhm.
It's just you have to make the payments in a certain way through an Italian bank account. It doesn't need to be your bank account. I
Mhm.
mean, we handle all the payments for our clients through our escrow account. So it doesn't need to be your bank account. You
Okay.
don't have, because many people think, oh, I don't have a bank account because they will not open a bank account for Americans. It's so hard. I'll just make the payments.
Yeah.
Okay. I mean, that's obviously an option too.
Yeah, I think a lot of people get so overwhelmed with all of the details and complexities of it. It's like a giant puzzle with a bazillion pieces. And
Yes.
so that's good. I mean, what every time I talk to you, what I come away with is, oh, okay, we need Nick on this. We need Nick on this. We need Nick on this, because there's so many complexities. But that is really good to know before you start doing a renovation, and also before you start, looking at it. A lot of people do want to rent out their vacation homes. So
Yeah.
that's fantastic. That's really good information. I don't know that I assimilated everything you told me, but I have a good idea. And again, we'll have to pull you in on these things, because there's also things like, the offsets, or and you may have been kind of talking about the super bonus thing. Is that what you were
Yeah.
kind of referring to?
Yeah, one of the options is the super bonus. That definitely, if the property qualifies, that is an amazing opportunity to do your renovation work, where you can either get 110% in tax credit, or you can transfer that credit to the contractor, and contractor usually buy it from you for about anything between 85 to 90%. So basically, they will tell you, give me 10%, I will do the job for just 10% of the face value. And they then cash the 110% tax credit from the banks and tax authorities. So not all properties, not all projects qualify for the 110%. They want your property to either get more energy efficient, or some other pretty strict requirements. But there are many people who are taking advantage of it, definitely, especially in small villages where properties are old and with systems that need complete replacement.
Mhm.
It might be actually not too hard to be able to access the 110% tax credit.
Oh, fantastic. So one of the things, and this is for people who are thinking of buying a ruin, one of the things that I heard from Antonello is that because a ruin doesn't have a habitable room in it, it will not qualify. However, what if you renovated one room and then applied? Is that possible?
As far as the property is zoned as residential,
Okay.
it will do it. So if you put in the minimum requirements to make it qualify for the requirements, then you can go ahead and then do the work. However, there is a very stringent expiration date on the super bonus, on the 110. You have to complete all the work by the end of June next year. They just extended it, and now they're discussing possible additional extension. My recommendation for this type of tax credits, there are so many of them. Even if you buy furniture, many people don't know, but if you do some renovation work, just because you have applied for a building permit, you can get up to 5,000 in tax credit if you spend up to 10,000 in furniture, like if you buy refrigerator, if you buy a new kitchen, dinner table, and whatever, whatever furniture, up to 10,000 euros, you get 50% back in
Wow.
tax credit.
Wow.
Yeah.
That's
Or
fantastic.
if you have a nice terrace and you buy plants and you do an irrigation system and things like that, that's also can be you get some tax credit there too. There are so many. So my recommendation is ask your contractor and the accountant of your contractor and or your architect. There are certain firms, architect firms, who specialize on these type of tax credits and incentives and help you really all the way through the project.
Oh, fantastic. We will definitely do that. It sounds like we have options already to get started on. So that's fantastic. Let's talk a little bit. You mentioned a 183
Yeah.
day rule. What is that?
Yeah, many people think, you know what, I will get residency because I want to keep my, I want to get the transfer tax reduction on when I close on my property purchase, and or because for citizenship purposes, it makes sense and makes my citizenship application much easier to get residency in Italy, things like that. And then, you know what, I will not spend most of my time in Italy, so I'm not an Italian tax resident. I do not qualify as an Italian tax resident.
Mm.
And that has been a tremendous mistake that many people, especially in British people, have done when transitioning because of Brexit.
Yeah.
If you establish residency in Italy, meaning if you register with the local township and you get actually the certificate of residency,
Mhm.
it doesn't matter at that point whether you are physically present or not in Italy.
Right.
So if you are in the record for more than 182 days within a tax year, then that makes you an Italian tax resident.
Okay.
It doesn't mean necessarily, once again, that you're going to pay Italian taxes, but it means that you are going to have to deal with the Italian tax system, meaning my recommendation would be to discuss your situation with a tax consultant, see what type of obligations you have, perhaps just disclosure obligation, perhaps also payment obligations,
Mhm.
and reporting and filing your Italian taxes. So chances are, if you are just living overseas and you are a resident, you might have just disclosure duties and perhaps some minor wealth tax payments in Italy. But still, I recommend to take that into consideration when deciding to get residency. And since we are talking about this, if you're taking residency to keep your 2% transfer tax reduction when you buy a property, many people think, oh, I have to keep it for 5 years. I don't know where they get that. I mean, there are certain rules that apply for 5 years, but really you could apply for residency. That will consolidate your 2% taxation entitlement. And then if you decided you want to cancel, you can cancel. You keep the saving.
Wow.
You can
Okay.
cancel it like the next day. You don't really have to keep it.
Mm.
So, and the same goes for citizenship. You can get residency, apply for citizenship in Italy, which is years faster than applying through the consulate.
Mhm.
And then once you have filed your application and it is processing, you can, when you see that it is on its way, after a couple of months, a few months, you can just deregister. And if you time it right, you can establish residency in July. So that will be the second part of the year.
Right.
And deregister when all your affairs have been settled before the end of June next year. So basically, you've been a resident for almost 12 months without triggering the Italian tax residency. Does it make sense? I know it's a bit confusing, but
It sort of does, but I'm going to believe you because you're an expert. I mean, it's like, woo, in my head, but that's okay. That's okay. I can see how that would work.
yeah. Sometimes when we work on these cases,
Yeah.
we come up with the plan and everything, and sometimes it's easier to just do the things and get things done, and then we deliver the result, and then most people will not really look into why or the dynamics or how that worked. But
it's like, that's good enough for me. Good. Yeah. Because, the big concern, like I said, is the high income guys, or the guys who have a lot of wealth and stuff. And I was worried about that too. I'm going, well, gosh, do I really want to make, our company huge? I do, of course. But that was a concern for me. So I'm hearing a lot of good news just on taxes in general. So is there anything else that you want to bring up? Because I know we kind of, want to keep this.
Yeah, sure. There are a couple of things that I think might be interesting for people who look into moving to Italy and buying properties in Italy. There are a couple of things that really I have never read anywhere else or heard from anyone else.
Yeah.
One of the things is if you're buying a property that is of some higher value, and really the 2% rule like the 2% transfer tax will make a difference versus 9% taxation. Yeah, sometimes you can save 16,000 euros easily.
Mm-hmm.
There is an option that not many people know about. You can reserve the right to basically move your residency within 18 months after the purchase, right? Like you go to closing, you declare that you reserve the right to become a resident within 18 months after closing.
Mm.
Then if your life changes, your plan changes, your plans change, and you decide that you cannot make it, you cannot become a resident, you can always notify the tax authorities and say, hey, I'm not going to make it. Sorry, please send me the bill. They will send you the bill just for the difference without penalties.
Oh,
and so some people think, you know what, for now, I will take the 2%. I will use the rest, that saving, I will use it to furnish my place, put a nice new kitchen or new bathroom. And then in 2 years, because basically in 2 years is when the 7% will come up for payment. And it's almost free financing, and at the end of the day, and then if you can make it, because you never know in life, if you can make it and become a resident, you keep it for good.
Wow, that's fantastic.
Yeah.
Okay.
Yeah.
That's
So
good.
that's
I love it when you say not many people know about this, and then we get some nugget of knowledge and wisdom that you have.
Yes. We try to really smooth in every angle possible. Not cut corners, but try find ways to make every investment make more sense and get the best out of it. Really, that's our goal.
Well, and you really have to do that, because somebody going in might look at it and go, well, I have to pay American tax and Italian tax and wealth tax, and if they did that without looking, there would be so much money, and you have to know your rights and your responsibilities in order to get the most out of it. It can look ruinously expensive, but then when you start looking at things, it's not quite so bad. Another quick question I had was the VAT tax versus that you were talking about, the 21% flat tax or whatever on earnings. So how does the VAT tax work with that? I'm not sure I really even understand what the VAT tax is.
Okay. So VAT tax, you could translate that as sales tax.
Okay.
So VAT is value added tax, means it applies when you buy a good or a service.
Okay.
However, when you buy a good or a service from a professional, so when you buy a home from an individual, it is not subject to sales tax, because it's an individual, it's a private transaction. So you're not buying a good from a professional. However, if you buy a property from a developer, that is buying from a professional. And the taxation completely changes.
Right.
And I'll tell you that very briefly. When you buy from a developer, you will pay VAT tax, so VAT, on the purchase price. And that will be 10% the face value, or 4% if you elect to become a resident of that town.
Okay.
So that would be 10% versus 9 if you buy from an individual,
Mhm.
and 4% versus 2 if you buy from developer versus individual with the commitment to become a resident. However, there is a significant difference because VAT applies against the purchase price,
Okay.
whereas the transfer taxes between individuals apply to they call it cadastral value, the value on record, which is always 30% of the market value, sometimes 20% of the market value. So can you imagine paying 9% of 20% of the purchase price versus paying 10% of the purchase price?
Yeah.
The difference in taxation is extravagant. So when people tell me, Nick, I'm buying this property, and I'm very motivated. I say, do you know that this is from a developer? So there's a 10%, or just because of that, there's a 10% in addition to the purchase cost. Do you know that?
Wow.
And compared to buying it from an individual. So and obviously buying from developers has a lot of good reasons or positives. You
Mhm.
buy a newer property, there is a warranty, there are so many positives, obviously. However, there are some costs to take into consideration, extra costs.
Right, right. Now let me ask you, renovations, that's VAT taxable as well, isn't it?
Yes, it's reduced. And so the standard rate of VAT is 22%. However, VAT for construction and things like that is 10%.
Oh,
So
fantastic.
it's
Good.
yeah,
Okay.
on residential units. Yeah.
Yeah, yeah. So the smart thing to do then would be buy something that's already renovated, but not from a developer. That seems like maybe the best, as far as taxes go, the best value for money.
Yes, if you are not planning on renting it. Because you remember, if you buy a ruin and
Mhm.
refurbish it,
Yeah,
your money will come back as tax credit.
that's right.
Whereas if you buy a turnkey property and you rent it, you will pay taxes on your rent entirely.
That's true. That's true. You almost need a flow chart for all these things,
Yeah,
to write it all down.
yeah, yeah. There are also other options. There are like mixed option. Like you could buy from an individual a
Uh-huh.
property that individual has not just refurbished, and you can actually, if the individual forgets to withhold the tax credit will go to the buyer
Ooh,
with the property. Yes.
and that could
So
be a
if
negotiating chip as well, right?
100%, we
Yeah.
have done some transactions where we discussed with the seller. The seller didn't have anything. The tax credit were not of use to the seller. So we negotiated, say, well, will you sell it to us? So 20 cents for a dollar, it's a deal. At the end of the day, it's a great way to create credit to offset your tax debt.
Wow. Wow. There's so many ways to go about that. Another
There
really
are
good
so many
question
ways.
that something's in sideways in my brain. The VAT tax. So for people who want to rent out their properties, they have to pay income tax, and then do they have to pay VAT tax on top of that because you're
So
renting
if you
out
if,
their
if
property?
you rent your property
Yeah.
as an individual,
Yeah.
if you are having the property into your name and
Yeah.
you rent it, there is no VAT because it is once again it is between individuals. It is personal property. It is pretty much there is no, it's not a service tax because you're not acting as a professional.
Oh,
So
even
it's
if you're
just
renting with Airbnb and Booking.com?
exactly. And so if you have up to and run up to 4 properties, that is considered personal. If you have more than 4 properties, that would be considered commercial. Now,
Oh,
they just came out with this about a month ago with this change because they thought it's too easy to run a business with the personal incentives
mhm.
or I say incentives that are meant for individuals.
Yeah.
So what are people going to do now? They already, found a way. They're going to have the spouses buy one spouse a set of 4 properties, the other spouse another 4, and there you go. Already becomes not 8 properties, and with that nuptial agreement trick, which
Yeah.
is not really a trick. It's a thing that many Italians do anyway. just because it is easier. It shields responsibility, liability. It is actually very, very advisable to have it, and it's so easy to do that yeah, basically it allows you for more leverage, definitely.
Wow. Wow. This is good to know. Okay. That's fantastic. Good. Well, that's all the questions I have, but if there's anything else you want to bring up, I know we have a lot to talk about when we meet again. Is there anything else you want to say on that?
Really, every situation offers opportunities for leverage. It's just a matter of finding the right the right angle and leverage it,
Yeah.
really, and plan in advance. Many times, really, a tiny plan in advance, and it's like a lever.
Mhm.
The earlier you plan, the more effective that planning will be in the overall scheme or overall project, because you have more options. The less you have put in place yet, the more option, the more strategies you have.
Yeah. Very good point. Very, very good point. Well, that is fantastic. So, yeah, I mean, I think I'm going to have to, watch this video several times, and our guys are going to have to go through. I want you guys to take notes. Take notes when you go through this, and make an appointment with Nick, because this is actually really good news. There's a lot of questions that I had in my mind that you answered today, and it makes the whole idea of residency and everything much more palatable. So I know there are several people that have been very upset and written to me, who now are going to feel a lot better, and they'll
Yeah,
probably be calling you, which will be a good thing anyway. I mean, every
absolutely.
situation is different, and it has to be evaluated on its own merits. So you do really
Sure,
have to, you know,
sure,
talk to Nick
sure.
about some stuff.
Um, Here is just, since you mentioned it, it just came to mind a picture of people who called me
Mhm.
desperate for when they realized about wealth tax. Just a couple of very quick for people who watched up to this point,
Yeah.
this video. People ask me, so will my pension fund
Good question.
will be, will I have to pay wealth tax on that, because that's a financial investment and overseas pension. So if it is dedicated to your pension, it is for pension purposes,
Mhm.
there's no wealth tax. Um,
Yay!
yes,
Oh
exactly.
my goodness.
Or other people, this is another very popular question.
Uh-huh.
People say, I have a company, I have a big family company in the US. It is not a public company, it's just private. It's just extremely, it's doing extremely well, and it is extremely valuable. If I had to pay even just the smallest wealth tax, which is 0.2%, it will be a big hit.
Yeah.
So the good news is there's no wealth tax on privately owned companies. They are no public, they are not traded.
Yeah.
And this is one of the most common misbeliefs.
Yeah.
And the last one is the Italian tax number. Many people think, oh, if I get a Italian tax number, I'll be liable. I'll be under the radars, the radars of Italian authorities.
Yeah.
No. And the last one I want to mention is the U.S. protects the U.S. citizens very, very well.
Mhm.
There is no exchange of communications between Italy and the U.S., so not even by mistake information might be exchanged. And I'm not saying here that you should hide anything, but it's just that if you do your things right, um, you know, everything can be done in a way that you are optimizing your investments in Italy, your life in Italy, while preserving your wealth and doing the right thing, obviously, and filing your taxes in Italy, but without unnecessary aggravations.
Yeah. Yeah. Oh, this is pure gold. I'm so grateful for you taking your time and clarifying all of this. I know I feel relief, and I know a lot of other people will too. So this is fantastic. Well, thank you so much, Nick. Once again, we have a video that's chock full of really important information, and we really, really appreciate it.
My pleasure. Thank you so much, Chris. It's been nice. Thanks a
You're
lot.
welcome. You're welcome.